everyone. It's the Rose Show. I'm sorry
Hi.
I'm a few minutes late, but I had some technical difficulties. So we're here, and I'm here with Jacklyn Maldonado. So
Hi,
excited.
everyone.
It's all about, making connections. And we met, and it was just like, whoosh, we got along. It's unbelievable. It's just, it's so important when you come across people that you can relate to,
Absolutely.
grab onto it, because it's so hard to find those connections. And so here she is. She has been in the real estate industry doing loans for quite some time now. She works for Loan Depot. And, Jacklyn, tell me a little bit. Tell everyone about what
My
you've been
my,
telling
my
me.
journey?
Yes.
Well, I got into the mortgage business quite a few years ago. But before I got into the mortgage business, what led me on my journey was the fact I was like 23, and my husband and I were looking to buy a home. We were very young. We started a family young, and we had
To be
absolutely
young
no
again.
experience.
To be
No
young again,
experience.
right?
Absolutely. We did not know what we were in for. And like anything, you start the journey and it doesn't work out the way you anticipate. You weren't properly prepared. And we lost our offer, et cetera. We couldn't get the mortgage. But, the next year we worked on it. The next year we came back stronger than ever, and we decided to buy something and we got it. But the big thing was that feeling of disappointment, and it led me on the journey with my new loan officer at that time. He said, "Hey, you speak Spanish." He's like, there's an avenue for business for you. Have you ever thought about it? And I was like, well, no, I really didn't. He's like, you should really get into this business. And that's what led me on my mortgage journey.
That's fantastic. What was some of your disappointments as a young buyer, going out looking like, let's help, let's try to help some of these young buyers that are out there. What would you tell them to look out for?
Well, the
What
first thing
do
was
to get themselves ready?
at 23, I didn't know what it was a credit report.
Right.
I didn't know the importance of, you have to pay things on time. And what is that? How does it impact your credit? What's the down payment? What are the costs involved? What's my mortgage payment? Things like that. Everybody wants it, but, there's a level of responsibility and things that you don't know what you need to do. I never had anybody teach me when I was a kid, hey, this is what you need to do. So, we kind of went into it with our eyes closed and learned along the way. And I felt the disappointment that a lot of people end up facing, and it was detrimental to me. It changed my life. It changed the way that I do business, because I believe in setting people up for success, and I believe in making their dream a reality. So I take every client that I work with very seriously. I
That's
never want to
great.
disappoint anybody.
That's awesome. So what should that 23-year-old, young buyer start getting ready to do when they want to go buy a home?
Well, they definitely want to monitor and make sure that they're paying their, accounts on time. Today, it's a big thing with student loans. Student loans will, either make you or break you when it comes to obtaining a mortgage because of the monthly payment. Most, kids don't know that even if your loans are on deferment, on the mortgage end, we have to count, a percentage of that payment against you, whether it's at zero or not. So that's one big thing that I would say. Make sure you keep your credit intact, make your payments on time, make sure nothing, goes 30 days late. If you're going through any type of financial hardship, then the most important thing is to reach out to your creditors and talk to them. And sometimes they do have programs out there that can help you without impacting your credit in a negative fashion. But the
Mhm.
most important thing is to make your payments on time, because if you can't make a $25 a month payment, as trivial and small as it is, then how can you make a payment that's 1,500 or 1,800 or $2,000 a month? That's how things are looked at.
Right, right. And so the credit reporting agencies, how long would it take for them to report that?
Payments on time. What do you mean?
The payments that are not on time.
Generally, it's within 30 days, 31 days to be exact.
Yeah, so they
So,
should definitely be
mhm.
careful, right?
Absolutely. It's really now listen, in anything, of course, some things happen. Sometimes there are circumstances, especially we're in the COVID world, where people have gotten sick,
Mhm.
at no fault of their own, and things happen. So, again, there is a time that, you have to heal, catch up, make your payments back on time, get back on track. And usually I would say within 12 payments of making your item, your accounts on time, we could always revisit it and see, where your credit is. But it's like if you fall down and you skin your knee, there's a healing period.
Mhm.
So you just got to go through your healing period, so it's an isolated incident that happened, and keep making your payments and moving forward.
Yeah, that's so important, and it's so important, like you said, to reach out. I think that especially the younger generation, they
Mhm.
they are afraid to get on the
Yes.
phone, talk to people, you know, but they have to understand on the other side of that phone is a human being just like
Yes.
us who has feelings that can
Yes.
understand the situations that you're going through. And sometimes, if you're late, they'll understand it and they'll just let it go without having to report it to the credit agency, right? They sometimes they
There's a lot, well, with the whole COVID situation.
reimburse.
There's additional programs that were not available before, because of the pandemic. So I just tell people, even if we were in a pandemic, it's always good to reach out to your creditors and let them know, because a lot of times they have different programs available that can help you.
Right, right. That's key. How many homes did you look at when you were 23?
Think we looked at, now that at that time it was the early 2000s, so it was a buyer's market. So
Yes.
we've looked at quite a few, over 10, but not like today.
So yeah, so back then, right in the early 2000s, then we had that big
Yes. Hmm.
surge.
Yes, we did.
The market was bananas. It was a seller's market, right? For so
Absolutely.
many years before that bubble popped. So you got into the business
Hmm.
to help people, and
Yes.
you speak English and Spanish. So
That
that's amazing.
that is correct. So it's very important to also help my Latino community, regarding the mortgage process and what to expect. So, that's really important as well. And I specialize in that area. I've been working with a lot of the Latino community for many, many years.
That's great. So what are some other points that you can give them?
The Latino community,
Well, either
anybody?
buyers.
Okay. Buyers in general. Again, number one, you want to make sure you make your payments on time. The second thing that's very important that, sometimes people don't think about, is the fact of cash, large deposits that can't be sourced. So that's a very, very big important thing as well in our, with getting a mortgage. Sometimes you might have, let's say, lent a family member money, and then you decide, like, hey, I want to buy a house, and now I want the money that I borrowed back. And they might give it to you in the form of a, cash or etc. And then you think you could just use it and go through the process. But if we cannot source, where the money came from, unfortunately you can't use it. So that's another one that I see that's really important. And
Mhm.
talk to your mortgage loan officer as soon as possible. Always be open and honest about your situation, so that your loan officer knows how to help you and provide you with the right guidance.
So the first process for the buyer would be, when they're getting ready, I guess, to make sure that their credit is good, right?
Mhm.
By making their payments on time.
Absolutely.
Saving money, right? Saving money is huge.
Very
Um,
important. Yes.
Although there's so many different programs where you could put down small down payments, right? But
Yes.
it's really important to have, I at least how much do you want them to? Does the loan officer tell them to keep banked away? What is it?
So,
2 months, 3 months?
in today's world that we're in, again, the bank has its minimums. There are different programs for different situations. Now, we do have a program that we participate with, the first time home buyer, with the NJMFA program, that basically gives a $10,000 for first time home buyers. But generally speaking, 3.5%. There's USDA, that's no money down. We have the VA, that's no money down. But again, those are the bank's minimum standards.
Mhm.
However, in this market, it's really going to depend on the competitiveness of your offer and how many people are looking to buy the same home that you are.
Right, right. Do you find now that there's more conventional loans that are being done than FHA or
Y-
USDA?
You know, I would say that from the seller's perspective, they look more for a conventional buyer than FHA, just because of the market that we're in. But I would say, there are still FHA loans. They're great loans, and but it's just I see that there's more. They're looking more for a conventional buyer in this market that we're in.
Right. Yeah. I know there's some buyers that are going bananas because
Yes.
they're in the multiple offer situation, and sellers are looking at what they have, in terms of financing, and the conventional ones are the ones that are, moving to the top.
And listen,
Jacklyn, you have the sun shining in right upon you. If you move yourself a little bit, we'll be able to see you a lot more.
I don't. Is it up or down? I can't tell.
Let's move your camera a little down.
Oh, that's better. Okay, perfect. I think. But
Yeah,
actually, you know what? I might have to hold my hand there.
it's still coming. Yeah, it's still coming in a little bit. Maybe move the camera down a little bit or closer to you. Move back
Maybe.
so that I think it's right from that window that's coming in.
Like,
Oh, there you go.
I'm
Perfect.
trying. Guys, bear with me because again, I'm trying to hold this up while trying to block the sun from here.
That's good. Okay. I mean, it's up to you, however you want to, whatever you feel comfortable with. It's up
That's
to
okay.
you. This way
I'm
we can
trying.
see your face.
I don't. The sun is very bright today. That's
Okay,
fine. If
great.
it's, I'm going to do my best to hold this here. But if I give, uh, you know why?
Okay. All right. So, um, what was my next question to you was, when you were growing up, what did you want to be when you got older?
I wanted to be an attorney.
Really?
Yes, I wanted
Why?
to be an attorney. Why?
Mm-hmm.
Because I wanted to be able to fight for people. I wanted to help them and let their voices be heard and help them achieve, whatever their goal was, that they were looking to accomplish. But I always wanted to help people's voices to be heard, and I was that person that I felt like, hey, I'm that right person that you need to be on your side to fight for you.
You see, that's fantastic. I think that ties in with what you're doing.
Mhm.
It really does, right? Because you're fighting
Absolutely.
at the loans, and teaching them what they need to do.
Yes, and it's very important. You have to understand. Like, listen, things happen. In this world today, financially for people. And I always believe that sometimes bad things happen to good people. But the important thing is that
Absolutely.
whether it's a medical situation, sometimes things happen. Not everybody plans for things. It could be a divorce situation, it could be anything that happens to someone that they're not planning for. They could fall and or get into a car accident. I've seen instances where that's happened and they were out of work because of that.
Yeah,
Again, like I always say, if something like that happens, okay, you want to work on trying to catch your accounts as quickly as possible, get yourself on track, and then at that point moving forward, you want to make sure that you're current and on time with everything. And then it's about documenting your incident, what happened, and providing that information to the bank so that they can understand what happened. And I think you've got to put that right picture to the bank so that they understand what's going on. And like I said, there are certain programs that are out there that are more flexible when it comes to underwriting.
right. So the new buyers that are out there, so they don't know where to start,
Okay.
right? And the most important thing is getting together with a loan officer they feel comfortable with, right?
Absolutely.
They have to feel that connection. And
Yes.
so the first piece of paper they get is the pre-approval, right?
Yes.
Does that
Absolutely.
so I think that a lot of times
Hmm.
these first time buyers, young buyers, don't realize that that's not actually the commitment
That is correct.
the bank gives you. The pre-approval is just a preliminary piece of paper that says the bank is willing to do this if you have these terms, right?
Exactly. What it really is the loan officers giving their professional opinion that based on your current circumstances that you would meet, you know, the eligibility of getting a mortgage. But that's not the bank saying, hey, you're getting the mortgage.
Right. And
So
how important is it for these buyers, these first time home buyers, well, buyers in general, right, that are
Mhm.
looking to buy, to make sure that they stay on top of that and get that information into the bank?
It's very, very important. Um, Generally, when I do a pre-approval, I get the information, with them ahead of time before they start shopping, and we come up with a budget. We discuss, what their affordability is, down payment, closing costs, etc., what their expectations are, but also how much their mortgage payment's going to be. Sometimes they don't even know what their mortgage payment's going to be, and, it's important for me to set people up for success. So I don't want them going out there shopping and then all of a sudden they're like, oh my God, my mortgage payment's this and I really can't afford it. So we want to
Right.
make sure that we take their budget into consideration, which is very, very important. But yes, you got to get all the paperwork to your loan officer as soon as possible because paperwork does expire. And once you
Exactly.
go into contract, there are very tight deadlines that have to be met, especially
Mhm.
when on the contract they say, hey, you have to have your commitment by this date. So you've got to make sure that you get your paperwork, you work with your realtor, you work with your mortgage specialist, you work with your attorney, and making sure you get all the information, that's necessary, and the other aspects of buying a home, with the professional that you choose.
Yeah, that's so important. It's so important, like you said, on that contract date, right? Because
Yes.
if they need a mortgage commitment, if they need a mortgage to buy a house, like, you know, they need to get that paperwork in, and that mortgage commitment needs to be in by that date on that contract. Otherwise, that
Absolutely.
contract will be breached.
Yes.
And time again, these dates come and go, and the commitments are not in yet. And technically, they could lose their property because they didn't get that commitment on time, you
That
know?
is true, especially in this competitive market that we're in.
Oh, yeah. Oh, yeah, because, all the other
Oh,
lenders are waiting.
you got to
They're
get that
waiting.
information in. Otherwise, somebody can come in and swoop that house from underneath you.
It is the truth. It is the truth. Yes. Buyers, this market is great. We know that interest rates are now going up.
Yes.
Hi, yay,
They're
right?
going up very, very, very
What
quickly.
what kind of advice would you give everyone?
Whew. Well, in today's market, with interest rates going where they're going, um, you know, I would say don't wait. I've been telling people don't wait because it's going to cost you more money in the long haul. I
So
do
many people
understand.
are saying, right? So many people are saying, "Oh, I think it's gonna burst. I'm gonna wait a little while. I'm gonna sit back and just wait. I think it's gonna burst." What would you tell them?
Well, listen, I don't know if it's going to burst. I'm not an economist. I'd be a
Right.
millionaire if I knew where the economy was going. But I would certainly say this, you know, why why wait till tomorrow? The prices are continuously still going. They're still going up. We still have a shortage of inventory. Yes, rates are going up, but there's always later down the line an opportunity to refinance your home. So again, real estate is a long-term investment for someone. You've got to, it's not an investment short term. But again, if you purchase a home, it's way better investing in your future than renting because you're paying somebody else's mortgage, and you're not going to get anything out of it in return. If you buy a home, then obviously you have a long-term investment, which you could utilize multiple different strategies to help you build wealth for yourself and your family in the future.
Right. And a lot of people don't realize that, but yes, when you're getting into the real estate world,
Hmm.
number one, right, it's really important to make sure you like your realtor and you get along with your
Yes,
realtor.
absolutely.
This should be a relationship that carries with you for the rest of your life, right?
Absolutely.
Because it shouldn't just be that one time deal. Like that realtor should be there anytime you want to buy, sell, looking for their guidance, being able
Exactly.
to make money on the investment you just did
Mhm.
to keep making your money grow. And that's same thing with a loan officer, right? A loan officer works that same magic in making money
Absolutely. They
that way.
have me they have me forever if they choose to.
Right, right.
Again, I'm here to help them when they buy the house. If they decide that later down the line they want to refinance their home, I'm always there. And sometimes it's just call to say hello and see how I'm doing.
That's great. How long does usually a refinance take?
I would say about 30, 35 days.
And is it the same restrictions, same guidelines in terms of loan?
Financing?
Yes, the credit
Yes,
history and all.
absolutely. Well, again, I recommend that depending on, obviously the product that you go into when you're refinancing, because it depends on your product. But generally, I tell people you want to wait at least make 12 mortgage payments.
Mhm.
And then at that point, you could always refinance. Sometimes everybody wants to get rid of the PMI insurance. So there's multiple different products that you could utilize to refinance that can eliminate your PMI insurance without having 20% equity in your property. So again, I would say check with your loan officer, at that point, but there are different strategies that you could use. But in this market that we're in, obviously values are increasing very quickly, so you may have that opportunity depending on how much you put down. But again, depending on the program, there are other different strategies that you could use to eliminate PMI without having 20% down.
Right. So PMI, for those of you out there that not too
Mhm,
sure what PMI is, that is a insurance that
mhm.
the loan officer, no, not the loan officer, the bank,
The bank,
where
if
you're
you don't
getting
have 20% down.
that gives right, that puts it on your payments per month because
Mhm.
you did not put 20% down on the
Correct.
house.
So that insurance protects the bank. It's very different than homeowners insurance. So the PMI insurance is protecting the bank. It's what allows everyone to put, less than 20% down.
Right, right. Right. Awesome. Awesome. So number one thing, keep buying right now, right? Keep buying. Buy while the interest rates are still where I know they went up,
They're
but
still
it's
on an up.
still okay. It's
And
still okay.
again, should an opportunity arise itself, you can refinance your home.
Right.
That's what
Absolutely.
everybody has to keep into consideration. But it's important to have something for your future, for your family. Having a mortgage is certainly an asset versus renting.
People
Renting.
don't, yeah, especially the rents nowadays. I
The
mean,
rent, listen, the rents sometimes are even higher than the mortgages today. These
they are.
rents are out of control. They're astronomical. So
They,
again, you're going to be paying a high rent, and at the end, you don't get anything for all the money, all the years that you paid for rent, no appreciation, no tax benefits. So it's ultimately always in your best favor to purchase if you have that opportunity.
absolutely. You could definitely turn that rental
Hmm.
money that you're paying into a mortgage payment. And so if you're watching this and you are renting and you want to know how you could possibly buy, definitely get in touch with me, message me, and then I will put you in touch with Jacklyn as well to get the job done because you'd be surprised. The you could buy a house for less than what you're paying in rent.
Absolutely,
The
especially
payment
today.
will end up being less than what you're paying in rent because the rents are astronomical. And you know what? You can't even find the rental out there. It's
No.
so hard to find rentals.
And
You know
let's talk about the criteria in
right.
order for you to get a rental. Getting a mortgage is a lot more flexible than renting. You can't even, with rents, a lot of people love their pets. And a lot of these
Yes.
rentals today do not want you to have pets. And I think that's terrible for
It's
people.
so
Like
hard.
your pets are your family, and
Mhm.
in instances they're like your children. So for someone, if you're gonna go rent and they gotta tell you you have to get rid of your animal, it's terrible.
Yeah,
So
unless
again,
it's a service animal, right? The
yeah.
service animals are allowed, but otherwise, yeah, you
No,
have
aside from that, you can't. You can't bring your cat, you can't bring your dog, whatever. And it's their rules.
right.
So I would always say that, look at a mortgage, an opportunity to get it pre-approved for a mortgage. You'd be surprised a lot of the it's more, it's more easier to get a mortgage, in my opinion, these days than getting a rental.
Right. Right. So how would somebody need to contact you if they're interested, Jacklyn?
They could reach out to me on my cell phone. That would be the best way, or they could send me an email. Would be a fantastic way that
And
they
what
could
would
reach
your
out to
email
me.
be?
My email is jmaldonado@loandepot.com. And then
Perfect.
my cell phone is 609-389-8630. Again, 609-389-8630. Or you can put me in Google, you'll find me on Zillow.
Well, what do you know? It's time to go.
Well, it was a pleasure.
Thank
Thank
you,
you so
Jack.
much
Oh,
for the invitation.
you're
It was
so
my first
welcome.
time doing a live podcast, guys. So I appreciate it.
Yes, you did great. Thank you so much for being my guest.
Oh,
Guys,
my pleasure.
everybody, stay tuned for next Friday at 4 o'clock. And I hope you all have a wonderful weekend. Jacqueline, you as
Absolutely.
well, okay?
Thank you. Thank you,
Thank you.
everyone. Have a great day. Bye bye.
Bye.